What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why on earth Tesla does have the potential to continue to squeeze early into next week. But as we go on, there are many divergences forming, suggesting that the overall market could slow down or even reverse pretty hard going into next week, going into FOMC. So I'm going to break down how FOMC may affect the market, why this is super important for all Tesla investors, how this could affect Tesla's share price, and what the data is telling us about Tesla. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 4 days. Check it out before they run out. With that out of the way, let's get on with the video. So, anyways, when it comes to the market, guys, there's some very important things we have to talk about. That's the fact that Tesla's up over 11% for the day. Now, when it comes to Tesla, it looks to me like this is going to likely continue on the trend, and Tesla's going to fight between the resistance of 180 to 182.5. I also believe that Tesla could try to break past this and continue to push, but as this thing continues to push for 185 to 190 or etc., there is something going on in the market that could actually slow this thing down, believe it or not. But before I talk about that, I have to talk about some news that came out. Tesla has some very positive articles right here. This thing is up over 33% for the week alone. That makes it the best week in a decade for Tesla. But you also have to remember that Tesla was very undervalued to start this week. So getting the squeeze and seeing Tesla at these very low, market cap values, it helped this thing actually push up even harder. So that was very awesome to see. Now, on top of that, Kathy Wood was also buying into Tesla like crazy. She was very, very bullish on it. And I think Tesla became her number one holding in the ARK ETF. So to me, that was very awesome to see. Her timing was just absolutely impeccable in a way. And I also want to note that even though Kathy Wood is buying into Tesla right now, it does not mean that Tesla will just explode forever. You have to remember that, okay? Because in the market, okay, her buying into it is helping to bring in more FOMO. Tesla could continue to push up temporarily, but there are external factors that could also change things. That's going to be dependent on the Fed as well. We have Jerome Powell and the Fed that are going to be hosting their FOMC meeting. Powell is going to be speaking. If you want to know the time, I think I have it right here. The time is going to be next week on Wednesday at about, it's going to be a couple of hours into the day is when Jerome Powell is going to be speaking, and it's going to be on February 1st. And we know that when he talks, the whole market can move very, very hard. Now people are wondering, is he going to be hawkish? Is he going to be dovish? Well, the first thing you have to remember is the fact that the GDP is still relatively strong. We're actually not in a technical recession based off GDP alone. And I mean, we could even be in a technical recession in a way, but if you're basing it solely off GDP growth, we're technically not in one as of right now. All right, just based off that one factor. Now, with that said, this is incentivizing the Fed in a way to be a little bit more hawkish. We also saw the jobs numbers that are still very strong. We're not getting as many jobless claims reports, so the jobs market is still relatively strong. The Fed could still be hawkish based off that. And on top of that, what is a little bit better is the fact that PCE inflation that came out today, this was actually just as expected, if not a little bit lower. But month over month, it is actually kind of up. But overall, it is still lower year over year. It is still a bit of an improvement. So, in my honest opinion, it's kind of going both ways, but the Fed could try to be a little bit more hawkish, maybe not just based off the rate hike, but more based off what Powell ends up saying about inflation, because they might try to correct this market. I say that because when you look at SPY, you have to remember something. On A couple of days ago, okay, when the market was pumping, remember that time a few days ago when the market came down? I think it was right here. Where was it? It was like during one of these days. Oh no, it was right here. Sorry about that. When we came down to 387, when the market came down, Tesla was also dragged down because of this. What happened was the market was pumping. SPY hit 400. As soon as we hit 400, the Fed speakers came and they dropped this thing 13 points in just a matter of minutes. So that was pretty crazy to see them do that. It took them like less than a day to drag that thing down. And at the same time, I mean, Tesla also came down with the market. Tesla went from 137 all the way down to 124 in just one day because of the Fed speakers. So it really shows how much they could actually bring the market down. Now, this market rally is kind of like a the Fed is bluffing rally. And I do see that as a bit of a concern because of the fact that not only are there bearish divergences forming, which I'm going to talk about a little bit later, but you have to look at what smart money and dumb money are essentially doing. The market believes the Fed is only going to give us a 25 basis point rate hike. Do I know if that's going to happen? It seems very likely, seeing that inflation's cooling down a bit. But you also have to remember, inflation is also cyclical in a way. And during the summers, as we approach like the summers, we tend to see it actually increase a bit. So there is a risk of it actually coming up again. And that's why people like Michael Burry are saying that inflation may get a second wave. It still is very possible. Now, I also want to talk about this chart right here. I didn't mention this yesterday. Just to repeat, you have to remember that when the market has these tops, okay, just like this, what tends to happen is dumb money and retail, right? People who are not, whom the market is technically rigged against in a way, they're going to be bullish. They're going to be thinking, oh, the market's going to explode. We're going to all time highs. But then smart money, investors, institutions, the ones that are way more experienced, they're going to not be as confident during these peaks. And this is what happened during this peak right here back in like March. And what happened, the market ended up dropping because smart money did not expect the market to keep running. They weren't buying up here the way retail was. And then during the March, not March, the August run up, remember the market was pumping. What happened during the August run up? Okay. Smart money, they were actually not super confident in the rally. Whereas dumb money was so bullish, people thought that in August, oh, the market was going to go to all time highs. The bear market was over, this and that. And what happened? Retail got destroyed. And at the very bottom, as the market was coming down, smart money was shorting up here and they made some very, very good gains. Then the market goes to its low in October. What happened during this time? Smart money was very, very confident and bullish. They started buying down here, right? Institutions were buying down here. Retail, dumb money, or the majority of us were bearish. We were scared. We thought the market was going to collapse down here and just keep crashing. Instead, it ended up rebounding. So you guys could see these divergences that form, which tend to signal big shifts. So right here, during the trend that we had, the big uptrend we saw in December, dumb money was so bullish. People thought that, oh, the second that SPY broke this trend line, the market was going to fly. The market was going to go to all-time highs. But instead, let me just show you where this trend line was. Instead, that's not what ended up happening. The market ended up coming right back down, right? I'm sure you guys remember that. Pretty crazy stuff, actually. And I'm bringing this up because it really shows how much sentiments are affected by the markets and how it's shifting, right? Right here, when SPY broke the trend line, this trend line right here, the moment that we broke this, retail, everyday people, when we pushed up to 408, retail thought, oh, we were going to explode. They started buying up here. The majority of retail investors, they thought we were going to go to all-time highs. The bear market was over. But smart money was saying, no, we're not confident in this. We think the market's going to come down. And what happened? The market came down. So now the question is, what about up here at this level that we are seeing? Well, we have another big change, right? The market has been pumping over the last couple of days. And dumb money is so bullish. The majority of people right now, they're thinking, oh, the market looks bullish. They're very confident. They think the market's going to explode and go to all-time highs. Is it possible for the market to still continue to rally very hard? Sure, sure, it is still possible. But smart money is not betting on that. Smart money is thinking that I don't think the market's going to run. Smart money is saying that the market does not look very great. They're not buying at these levels, and they are most likely anticipating downside. All right, I want to warn everyone about that. Always remember, correlation does not mean causation. So just because we have these correlations, it does not guarantee that just because this divergence is forming that the market has to crash, but it is a possibility, and I want everyone to be prepared for it. So now for Tesla, what are the good things about Tesla? Okay, the good thing is the volume is just incredible. 304 million in volume. That's insane. That's almost twice the average volume the stock gets. So many buyers are piling into Tesla. People are very excited. Price price ratio is going through the absolute roofs. This thing is going crazy, which means Tesla is just outperforming the market. It's pushing up very, very hard. It's likely going to continue. Wolf Research, they're bullish. Wells Fargo is bullish. Wedbush is bullish. Cohen and Co is bullish. Citigroup is bullish. BOA Securities. Everyone is just bullish as hell on Tesla. They're just buying and buying and buying. Is this awesome? Sure. Could Tesla outperform the market? Yes. But you also have to remember the way Tesla moves is also affected by the market to some degree. Right here, look at how Tesla moves next to SPY. There tend to be very similar trends. And I do believe that Tesla is going to continue to push and outperform it at least temporarily. But what's going to happen if you look at Tesla and the QQQ? What's going to happen if SPY, the QQQ, and the whole market ends up coming down soon because of FOMC or something? That could slow Tesla down. Look at the trends right here. They're very similar. When the QQQ and SPY are coming down, when the market is coming down, Tesla tends to slow down or even come down as well, or at least respect the same trend. So I want to warn everyone about that. And now I want to talk about the charts. So there was one thing that happened that was a little bit concerning today. Okay? So we're on this nice rally on SPY, and this affected Tesla too. People turned so bullish. They thought that, oh, SPY was about to break out. What I told everyone was I predicted the top to be, excuse me, sorry guys, the top to be between 402 and 406. That was like where I predicted the top to be. We ended up actually topping out today at 408, and there's no guarantee that the top is in. But I told everyone that, look, I believe that this is a trap, or it's very likely to be a trap, unless we get a clean break and hold above 410. Okay, we have to break and hold 410. If we do that, if it actually could do that, there's a good chance, a much higher probability that the market's going to continue pushing, right? The market could go to much higher levels. It is still very possible. We're even very close to a golden cross and SPY, but but so far we haven't broken and held 410. And then here's the concerning part. Today, look at the market, okay? We pushed up, we rallied, we wanted to keep going. As soon as we hit the major resistance, 408 is one of the major resistance levels. As soon as we hit it, we came down a little bit, we bounced again, we tried again, and then boom, we got hit all the way down. We got kind of rug pulled down to 405. So then the bears came back and they were not happy seeing it up here, right? So this is a sign that the bears are still existent. The market is not necessarily just going to push up in a straight line, and you have to be very prepared. From a technical standpoint, I want to note something very important. SPY is not looking as great as some people think. I mean, I know it's pushing up, it looks relatively strong. It may even try to push up more going into like Monday or Tuesday, but you have to be careful because we're hitting major resistance and then we are forming a bearish divergence on the RSI. Look at the divergence right here. We have an uptrend and a downtrend on the RSI from that end. Also from this end too, there's a clear bearish divergence. And then on the daily, we have something very similar that's actually going on right over here. So if you look at the RSI, look at the levels the RSI has been at, there's actually a bit of an increase in the RSI value compared to this top, but the tops are actually a little bit different. The top's actually lower from this end, once again forming another divergence. And then on the 5 minute, we did actually form a triple negative divergence, I believe. right over here. So please be very, very careful with this stock because the whole market could end up making a big move to the opposite direction. And we are seeing some signals over here from a technical standpoint. I also want to note that the VIX, this measures the volatility on SPY. In my opinion, we rarely ever see it this low for this long. It tends to get a big bounce, a big push up eventually. It's been pretty much down there for quite a while. And we know historically when it hits these low levels, it tends to actually bounce pretty darn hard. At least as of recent, it has been doing that. If we are in a bull market, this thing could technically still come down, but there's still not 100% confirmation of that yet. And historically, since 2022, this thing tends to bounce once it's in the 17 to 19 level, and it might actually bounce and push up very soon. If it starts doing that, it could be a bearish sign for the markets. It's not necessarily like the determiner of the markets, but I'm just using this as one of the correlations we could make with SPY's implied volatility being this low. So on top of that, I want to talk about the QQQ, which is approaching that 300. Are we actually breaking above it? We are currently on the daily a little bit above the 200 EMA, but like I said before, we're still forming what appears to be a potential divergence right over here. You can see we are making a very lower level, a bigger divergence right here. And despite that, the RSI is at a zone that's actually a lot similar, a little bit lower than the RSI from back there. So I'd still be very, very cautious when playing this, but it is still very possible. Now, there was one thing that the market did, which is a little bit more bullish, and that is my NASDAQ. Not sure where I have it, but my NASDAQ it ended up actually invalidating the potential head and shoulders I had drawn out previously. And that's actually a pretty decent sign, right? It actually invalidated it by actually breaking above the purple line. So this is not a head and shoulders, but but we are respecting a rising wedge-like pattern. This could also result in it coming down. We also formed a lot of gaps, so I'd be very careful on the Nasdaq. It could still reverse. So the last thing I want to talk about now is Tesla. What am I seeing for Tesla? Here's my answer. Okay, right now, as of right now, it looks bullish. It looks to me like Tesla's going to keep going. It's going to try to fight for, like I said before, 180 to 182.5. Break above that resistance, this zone right here where the rectangle is, 185 is possible. Break that, I could see 189 to 190. And then we have a big gap between 190 to 194. If it breaks 190, we could actually fill this gap. And we can move pretty fast in like 1 or 2 days. Now, even though it's awesome and it is quite explosive, you have to be very well aware of the fact that we are oversold on the daily. I know when Tesla was squeezing in the past, it did not matter as much, but you still should be well aware that you have to be very careful with the chart. Now, on the daily trend, I also want to note that the volume is looking very good. We're getting very nice volume on this thing. It looks like it might continue to push to the upside, like I said before. And could we try to go for that 200 EMA? It is possible, but we do have lots of resistance on the way there. Now, even though it is pushing up very hard, like I mentioned before, I'm still very, very cautious. On the RSI, we do have a potential, a divergence that's forming right over here. We're making a lower high right here compared to this high, and yet the RSI is quite oversold. And on top of that, I know you guys don't like to hear this, but there are lots of gaps that Tesla formed, and some of these gaps could get filled, so it could reverse very, very soon. What could trigger the reversal? The answer is maybe earnings and also the FOMC meeting. Be very careful because if the whole market ends up like reversing off Jerome Powell's words, if the guy ends up saying things that the market does not like and we start downtrending very hard, if he rug pulls the market, which is very possible, right? Tesla could also get dragged down. Right? I'm not saying that Tesla would reverse because it's weak. That's not the reason why. It's very strong. It's incredible. I was very impressed by the things Elon Musk said. But I want to note that everyone needs to be prepared for this because FOMC could be very capricious. Anyways, that's what I have for this video. Are we going to continue to squeeze? The answer is for the short term, yes. I do believe we're going to keep going. I could see Tesla go for that 190 mark, maybe even fill the gap to 194, but it depends on other factors too. I do believe Tesla is going to try to outperform the market again on Monday, right? The volume is very nice. But there's no guarantee this is going to last for the whole week, because once Powell starts speaking, the whole market could reverse, and we are getting some many hidden bearish divergences suggesting that the market could reverse next week. So be very careful, guys. All right. Thank you for listening. I will go into more details about things Elon Musk said involving the FOMC meeting tomorrow. I will release a video about it. So be on the lookout for that. And other than that, I want the best for everyone. Thank you all so much for listening. Have a great rest of the day. Enjoy your weekend. Tesla to the moon, because the long term future is still incredibly bright. And peace out.